Well, for more on the story, I'm joined here by France 24's business editor, Brian Quinn. Brian, talk us through a little bit of the details of the deal and just how this all came together.
Sharon, there's been a lot of speculation in recent weeks about just how serious Elon Musk actually was with this hostile takeover bid. Obviously, it appears as though he has indeed pulled it off. Elon Musk will be paying $54.20 for each outstanding share of Twitter stock in a deal worth, as we said, $44 billion. Now, that's being financed with $25.5 billion in debt put up in large part by Musk's longtime investment banker, Morgan Stanley. Musk himself putting up around $21 billion in equity financing via Tesla stock. Now, that offer of $54.20 represents a roughly 38% premium over Tesla's share price at the beginning of April. It is, though, well below Twitter's market peak just last year. It was trading at over $70 per share. This is the biggest private takeover of a publicly traded company in some 2 decades, and it has happened quite quickly. It was only in early April that it was revealed Musk had taken a 9.2% stake in Twitter, making him its largest shareholder. Now, an invitation to join Twitter's board would have limited him to a 15% ownership. He turned that board seat down, instead making an unsolicited offer to buy the whole company on April 14th. In response, Twitter activated its so-called poison pill defense, in which Musk's attempt to buy more shares would have, in fact, diluted his holdings. But in fact, eventually, in response to shareholder pressure, in fact, the board eventually changed its mind. Here's one analyst on just how that decision was taken.
I think there were 2 issues that really changed the board's mind to do a U-turn on the Musk bid. One was the financing. Once Musk outlined the financing, that really was the clock striking 12 for the board, put their feet to the fire. And second was no other bidder coming. Once another bidder did not come, they were at the altar, but no one came. That's why they called back Musk.
Brian, there are still lots of unknowns about what the deal will actually mean for the company.
There are indeed. We saw in the report that we just watched that Musk wants to significantly loosen Twitter's content moderation. There are not only some ethical considerations for that, there are legal ones as well. Just this past weekend, Europe finalized new legislation that requires tech firms with more than 45 million active EU users to take more action to moderate their content, not less. Sites that don't comply face big fines, even potential bans. There's then the question of who's actually going to run this company. Musk has already said he doesn't have confidence in Twitter's current leadership. Elon Musk himself, though, a pretty busy guy. He's already running Tesla and SpaceX. How much time is he going to have for hands-on leadership of Twitter? Really not clear. Could former CEO Jack Dorsey come back? Musk and Dorsey appear to be pretty close on the internet. There's some speculation there. But will employees even want to stay? Silicon Valley compensation packages often heavily based on stock options. Elon Musk has basically just delisted Twitter from public markets by taking it private. He's also talked about turning the company's San Francisco headquarters into a homeless shelter. That was probably just some trolling on his part. There's also the question, though, of the company's financial performance. Last year, it lost nearly $500 million. Compare that with $39 billion in profits over at Facebook. Most of Twitter's revenue, in fact, comes from its ads. Musk wants to get rid of them. How is it going to turn around this lackluster performance? A lot of questions. The deal has to be approved by shareholders and regulators. Not much doubt that that will actually happen. But as for what comes after, there are a lot of questions, and we're just going to have to wait and see.